How much would an investor need invested into a high-quality dividend-paying ETF like the SCHD ETF in order to retire early? Now, this is a question that many young and old investors have for good reason. Retiring completely off of dividend income, meaning that your bills, plus more, are covered each month by the dividends being paid from an ETF, sounds like a dream come true, doesn't it? Well, please stick around until the end of this video because we are going to figure out the exact math behind an investor buying into the SCHD ETF and retiring completely off the dividends paid. Now, we are going to go through all this and more. Right after you, please drop a like in this video and subscribe for more high quality content like this in the future. First, let's look a little bit deeper into what the SCHD ETF actually is and what it has to offer. Now, if you don't happen to be familiar with what the SCHD ETF is, it's also known as the Schwab US Dividend Equity ETF, and it's a very popular exchange-traded fund that aims to provide investors with exposure to high-quality U.S. dividend-paying stocks. The fund is managed by Charles Schwab Investment Management Group, and this fund seeks to track the performance of the Dow Jones U.S. Dividend 100 Index. Now, this index is comprised of 100 U.S. companies that have a history of consistently paying and raising dividends over the long term. These companies also have a track record of strong financial performance, which makes this fund, in my opinion, very high quality. Now, just like any other ETF, SCHD is easily purchased on most exchanges and with most brokerages offering fractional purchases. Now, a little bit more about the SCHD ETF just to show you what has happened historically with the fund, to give you an idea of what a long-term investment into a fund like this could look for a young investor in the future. But to go back in history all the way back till October 2011, SCHD was trading at around $26 or $27 per share. Now, just a matter of 10 or so years later, SCHD is almost 3 times as valuable, currently trading pretty close to the middle part of the 52-week range at $71 and some change. Now, SCHD invests in public equity markets in the United States. It invests in stocks of companies operating across energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials. The fund is very, very well diversified. Now, this fund invests in growth and value stocks of companies across diversified sectors and market capitalizations. What's great about SCHD is that even though it does pay a substantial dividend, which we are going to go through here in a second, the ETF also has some massive capital appreciation, which means that in theory, whatever you buy SCHD today, it's going to be worth much, much more down the road. At least it has done that, historically speaking. And SCHD in the max time frame is up 181.97% on the chart. And what's great is that SCHD is still pretty much in the middle of the range of the 52-week range, 65.96 being the low and 79.49 being the high. So SCHD might possibly be a good buying opportunity as of right now. Now, this ETF also has a very cheap expense ratio, which means that investors are not going to have to pay all that much for holding on to a high quality ETF like this. The expense ratio is just 0.06%. This ETF pays the dividend every single quarter and has paid around $2.64 over the last trailing 12 months. The Schwab US Dividend Equity ETF's assets under management, how much money is in the fund, is $48.29 billion. So this ETF is very large, one of the largest across the entire market. Now, another thing I love about this ETF is the fact that it's heavily diversified. I'm a little bit more of a scared, more conservative investor personally, so I like to have my portfolio, I would say, even over diversified because it just helps me sleep better at night. But SCHD's holdings are industrials at 17.56%, healthcare at 15.52%, financials at 14.30%, consumer defensive at 13.32%, consumer cyclical at 9.68%, energy at 8.82%, communication at 4.66%, basic material 1.94%, and utilities at 0.28%. Also, the top 10 holdings for this ETF are very recognizable and have a history, a long-term history, of not only paying dividends but also raising dividends over the long term, which gives this ETF a very fast dividend growth rate. The top 10 holdings are companies like Broadcom, Pepsi, Cisco, The Home Depot, Coca-Cola, Texas, Merck, Pfizer, UPS, and Chevron. And overall, SCHD has around 100 different companies that do change out from time to time, but as of right now, the top 10 are very, very solid. Now, getting into the Schwab US Dividend Equity ETF's dividend yield. The current trailing 12-month dividend yield is around 3.6%, which offers a very decent starting dividend yield for investors that would buy some shares of this ETF right now. The annual payout is around $264, and the 5-year dividend growth rate is over 15%. Now looking at this ETF's quarterly payouts as far as dividends go over the last 10-12 years or so, it's obvious to see that the dividends that have been paid are continuously getting bigger and bigger and bigger, which means investors that get into this fund early will likely see some massive dividend growth in the future, and also will be able to have their investment money stretch a lot further and earn them much more money in the form of dividend payments that can definitely help investors retire early. So now that we know a lot more about the SCHD ETF and all it has to offer, including the dividend amount and the dividend growth that we've seen historically, the next thing that we're going to need to know in order to figure out how much SCHD we're going to need in order to retire, we're going to need to know the cost of living. So according to the Social Security Administration, it says for people that are reaching their retirement age in 2023, they're going to need right around $56,520 in order to have all their bills covered. So if we were to divide that by 12, that means that this investor would need around $4,700 a month, more or less, in order to have all their bills covered. Now keep in mind, this is going to totally depend off of your own living situation. If you're single, if you're married, if you have kids, if you have an expensive lifestyle, if you have a cheap lifestyle, this is going to completely depend off of whatever situation you're in. And I implore you to build out a budget for all your expenses and know these type of numbers because they are quite important, especially if you're interested in investing. So now that we know that we're going to need right around $4,700 or so per month in order to completely retire off the dividends paid from SCHD. If we head over here to the dividend calculator and input everything that SCHD has to offer, and give this investor a starting amount of just 100 shares of SCHD, which is relatively realistic for pretty much anyone. And also assume that this investor is going to contribute $10,000 into this portfolio to buy more shares of SCHD, which is less than $1,000 per month added into your portfolio, which again I think can be realistic for most people. If we were to calculate all the dividends, let's see what we get. So obviously what we're going to be looking for here is the annual dividend amount is going to need to cross through the $55,000 to $56,000 per year dividend range. Because at that point we know that this investor, in theory, could turn off reinvestment and could stop even deploying more money into this portfolio, and they could just retire off the dividend income. So it looks like on the dividend calculator, it would take up until year around 20 before this investor would have enough shares of SCHD along with the internal dividend growth rate in order to completely retire off the SCHD ETF. Now what's cool about this, and I definitely recommend you guys to once again mess around with this, is if you were to add more money per year, if you were to maybe add less money per year, if you were to give yourself a bigger starting amount of shares or whatever it might be, this entire equation is going to change substantially. So again, this is just in theory. If an investor started with relatively a low amount and also deployed just around $10,000 of additional contribution per year, it would take this investor just around 20 years to be completely financially free. But I want to hear what you guys think down below. What is the age that you are hopefully going to retire at? And comment down below how many years away it is from here. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks as always for stopping by, guys, and I'll see you in the next one.